Hello and welcome to this investment webinar. I'm Paul Rickard. Joining me today is the Managing Director of Investors Central, Jamie McGeachy. Jamie, welcome to the program.
Thank you, Paul.
Now,
Appreciate being here.
we want to talk about Investors Central, so let's start at the very beginning. What is Investors Central?
Investors Central is an Australian-owned, unlisted public company. And Investors Central was established in 2010 to raise capital for our retail finance arm called Finance One. Finance One does secured vehicle loans across Australia, providing more Australians the opportunity to purchase a motor vehicle, ultimately providing freedom through transport. So all the loans that we do are secured vehicle loans.
Okay, so I want to talk more about how someone might invest with Investors Central, but let's talk about the loans you actually originate. So you have a company called Finance One and it's providing loans through finance brokers?
Yes. We've got over 1,000 finance brokers across the country. So we've got representation in every state and territory. They refer loans to Finance One, who follow strict lending guidelines, credit analysis process, and due diligence tests to ensure that we take on good quality clients. It's how we engage our clients that's ultimately how we keep them on track.
And so who are the type of clients that borrow? What are they borrowing for?
Mostly secured vehicle loans.
Right.
We do commercial loans for light trucks up to 10 tonnes. So it's got to be a critical business investment for prosperity. So a business that needs a van for work or a truck to run their business, they're the kind of clients that we're looking at. We also do individuals, which is the vast majority of our loans. Our average loan is only $16,000.
Right. So this is done through your subsidiary Finance One. It has some very strict lending criteria?
It certainly does. Our credit matrix has been developed over the last 20 years. So we've been lending and collecting money for 20 years. So we've been operating loan books. That's my forte, I've been doing collections for 20 years and we've built our team and credit matrix over that period of time.
So you lend, the finance brokers arrange these loans, but they're right throughout Australia, is that correct?
Yes. As I mentioned before, we've got representation in every state and territory. The finance brokers are only a referrer of a lead to Finance One. So they send us an application form, proof of address and income, a credit file, 3 months worth of bank statements and a proposed vehicle purchase. Our team at Finance One validate each step. So we're a high doc lender, not a low doc lender. So we'll validate the people's address. So we'll ring up if they're renting, we get a tenant's ledger, making sure they're making their rent payments on time. We ring up their employer, making sure their employment is ongoing. We check their year-to-date figures. We do an ABN search. So we really drill down into this client's profile. We then look at a minimum of 3 months worth of bank statements. If it's a commercial loan, we'll get up to 6 months worth of bank statements. 3 months worth of bank statements, Paul, is a window to somebody's financial soul. So you're able to drill down and really understand what that client is spending their money on. Do they have capacity to repay the loan? And are they truly creditworthy to be able to have a loan with Finance One? Through that process, we're looking for other expenditure and we build that into our capacity guidelines. So the broker is only a referrer of a lead to Finance One. We then look at their vehicle purchase. Is it a sensible purchase? Is it going to enhance their lives? We look at their credit file. The market's quite large. There's an estimated 4 million Australians with a default on their credit history. Now that can range from a telco or an unpaid utility bill. Now those clients, that'll sit there for 5 years. So a client might have had a previous problem in the past, but they're in good employment now. They're at a steady address, so we've got stability around their employment and their residential address, and then we take all these factors into consideration. Paul, only 1 in 5 clients actually settle for a loan with Finance One. So 4 out of 5 don't make it through. We're very prudent on whom we choose to get a loan.
Now Finance One is a wholly owned subsidiary of Investors Central. So just explain to me the growth of Investors Central and how those two companies relate to each other.
As I mentioned before, we've been doing this for 20 years. We established Investors Central in 2010 to meet the market demand. So we just couldn't finance it all ourselves. We had to take on some kind of investor or a large financial institution to be able to fund the book. When we modelled the business, we looked at the large financiers and we ended up going the direct investor route. We don't have any other financiers other than our investors. Our investors rank before ordinary shareholders in preference to be paid. There's a covenant through the prospectus. Plus, we match our lendings to our borrowings. So what we do is we raise capital progressively only to meet the demand of Finance One. So Investor Central's the unlisted public company. It owns Finance One. It raises the capital on a monthly basis. So we're in control of when we raise money because we don't need it all the time because we've got to match the demand through Finance One. And our investors get an opportunity to invest with a first ranking charge over secured loans and from anywhere from 8 to 14.35% per annum.
Now, we've got a graph on screen at the moment which shows the growth of Investor Central, and you can see that the loans you've got are less than the capital or less than the total value of the company. Can you just explain this graph?
Yeah, we're particularly proud about how we've structured that. So from day one, we've reinvested all the profits back into the business. So not only do we have now $7 million worth of equity into the business, we've also got in our own capital over $2.5 million as just an investor. So you can see the graph shows our size of the loan book to funds borrowed from investor. Now we reinvest.
So you borrowed
profits.
less from investors than you had actually lent out on the other side. Is that correct?
Certainly.
Yeah, and that effectively is the capital that you have in the business.
Correct.
Yep.
Yeah. And that provides a buffer for the investors as well.
Okay, so this all sounds really exciting. So what if I want to be an investor in Investor Central, what sort of returns can I look at?
Yeah, from 8%. So we have a fixed interest term. So it ranges from 1 year through to 5 years at interest rates of between 8 and 14.35. So the more you invest and the longer the term, the higher the return that you're able to get. So an investor could put a toe in the water for a 1 year term from $25,000 and they get an 8% return on that. Computershare is our share registry. So they get issued a share certificate in our company for a redeemable preference share. So, and we pay interest on a monthly basis. So if you're a self-managed super fund, it can be in a company, a partnership or a personal name, you're able to get an interest payment every month from our business for the term and life of the loan. When it comes to redemption, we 2 months out prior to redemption, we contact our investors and see whether they want to either roll that over or redeem. So we redeem that out of the profits that we retain into the business. That's most important.
So as an investor, I'm effectively lending money to Investor Central through a preference share, and Investor Central lends money to Finance One, which is dealing with these 1,000 finance brokers and thousands of small loans that you've got out there in the vehicle market. Is that sort of how it works?
That's it, Paul.
Yeah.
So the risk is spread because the investors have an overarching. So it's not just one loan that they're lending to. The first loss becomes to the business. So there's a higher level of protection there. So it's not like a traditional peer-to-peer lender where they may line you up with one particular borrower. We're not like that. So we've got 6,400 active clients across Australia with a loan.
So a very
Finance
diversified portfolio of loans. Maximum loan size, I think, is what, $50,000?
Yeah, it goes up to 75 for our commercial loans, but our average loan size is $16,000. So small ticket items, you've got no large loans that are going to fall over, you've got no $1 million loans, so the protection there is paramount about those small ticket items, like you were saying.
So the interest rates that Investor Central are offering are obviously very attractive, but there's got to be some risk, doesn't there?
There's risk to, I think, every investment that we've had. We're paranoid about our responsibility to our investor base. Now, we've structured the prospectus and have covenants in the prospectus to protect the investors. We feel that we've looked after the investors first, and if we look after the integrity of the business and the investors, all else will go well. In saying that, there's a covenant in the prospectus to say that we'll reinvest the profits on a monthly basis too. So we don't take out dividends out of the company. We don't take out equity. We reinvest every dollar. They can even see what our directors, our current directors, have as an investor invested into the company, and also see the wages and salaries that we take out of that as well. Notwithstanding that, our investors rank before ordinary shareholders in preference to be paid.
Now, you obviously, in this sort of business, like in any sort of financial business, you expect some bad debts. You've got a chart here that explains sort of the expected bad debts and how much cover there is in case things really went wrong.
Yeah, our write-off tolerance report is well received from the investor base because they ask, what could go wrong? And when we looked at the business and weigh up all the options, look at the worst case scenario, a depression or a big recession where unemployment is 30% and things like that. So as it stands at the moment, investors can see that we're owed in principal and interest from our clients over the next 5 years over $105 million. This was as at the 31st of December 2016 for our half-year report. What we owed to our investors after cash holdings are returned to them is just over $59 million. There's a difference of over $45 million from what we're owed by our clients to what we owed our investors. Now, the right of tolerance report's designed to show the robustness of the business. We continue to build a substantial margin of safety. That's why we reinvest all those profits back into the business. Notwithstanding that, our historical write-off tolerance has been for provision for doubtful debts of 2.3%.
And that's showing on the first column in that.
Yes, it is. We're still owed over $103 million. If we're to stress test the business model and look at a 7% write-off.
So that's a sort of a 3 times increase in the current, your historical bad debt.
Yes, at a 7%. And then we go right up to a 25%, and we're still owed more than what we owe our investors. Every business is breakable, every business. So for us to sit in front of our investors and say, oh, nothing can ever go wrong, well, that's not true. But what we've done is taken every situation into account that we can possibly think of and protect the investors. I've been doing this for 20 years. I've finally found the business that I want to operate on the national level, and we're going out there and we're doing it. We've been doing it for the last 6 years, but we need to meet our obligations moving forward. We'll be remembered for all the right reasons.
Right, okay. So if people want to invest, obviously they can go to your website, but they will obviously need to download the prospectus, don't they?
Yes. investorcentral.net.au is our website. You're welcome to download the prospectus. We like our investors to understand the business that they invest in, Paul. So what we do is we have a 3-monthly performance update. So our investors get a performance report every 3 months. It shows the loan book performance, but also detailed management style financials. Through those financials, they're able to see exactly where the revenue that's been made, the money that's being spent, and the money that we're making every month. We've been profitable from day one.
So transparency is a big part of your sort of business ethos, is that right? That's sort of what I understand from that, James?
Paul, we understand our responsibility to our investors. We take a bricks and mortar approach and to provide our investors with the tools to track and monitor their investment. So through those, they've got easy access to our board of directors and management team. The performance report every 3 months gives them a detailed management style report of the performance of the loan book and financials. We're an unlisted public company. So every 6 months, we do a fully audited report. So we do a half-year report and then our full-year audited report. And we also have presentations to our investor base.
So finally, these presentations, they're held every quarter?
Every 6 months.
Every 6 months, yeah.
So every quarter they get a performance report, and then every 6 months they get a half-year report, and we have a lunch and presentation. We do our lunches in Sydney, Melbourne, Brisbane, and also Townsville.
So if you're interested in investing in Investors Central, go to the website. It's investorcentral.net.au. Jamie, thank you very much for joining us.
Pleasure, Paul.
And it's been great to meet you. I'm Paul Rickard. We'll talk to you again soon.